another live stream. Today we're going to be discussing the end game for gold and silver because the situation that we're witnessing right now in the global economy and here in the US is going to get pretty ugly pretty soon. At least that's my forecast. And this is really why we are stacking gold and silver. Now, the inspiration to cover this topic came actually from some criticism that I received recently. And, that's fine. I know that not everybody's going to agree with all of my calls, and my ego's not so big that I can't withstand some criticism. But this is an individual who I'm sure is probably watching this video right now, but who I know watches regularly. And I figured if this person has some of these kind of misconceptions about what's going on with gold and silver, there may also be some others out there who share these misconceptions. And so I wanted to address some of these points that this individual was critical on. Now, the first thing I want to point out is this is somebody who says they just sold a lot of their silver. And I've kind of been talking about the sentiment for the precious metals being very low lately. You can tell that just by looking at how the gold to silver ratio is shaping up. Right now, gold to silver ratio over 90. Now, you've got to understand, this is near the historical highs for the valuation of silver relative to gold. And when this ratio is high, that means that silver is historically cheap relative to gold. So, to me, this is not a time to be selling silver and moving into gold. Quite the opposite, actually. I mean, I've even considered selling some gold and getting into silver, considering how cheap silver is to gold right now. But I haven't done that because the fact is I've never actually sold any of my precious metals. I've just been in accumulate mode for more than a decade. And, the thing that's driving me to do that is essentially the end game that we are headed towards, because it has been obvious to those who are paying attention for some time. And, that's another criticism that I've heard of those of us who, say we just kind of keep stacking regardless of what happens with the price. When the price moves down for gold and silver, we tend to be happy because we can get more of it. And, people will say, well, you've been saying that for a long time. A lot of people have been saying it for a long time. That's because the end game has been obvious for a long time. Another criticism that this individual levied at me, and I just want to briefly address this one, is that, I'm viewing every decline in the price of silver as just another buying opportunity. And, you do kind of sound like a broken record, I guess, after a while. But the thing is that the silver market is very volatile. It does have these big moves up and down. And what I've actually been doing is buying on the dips. I mean, that's what I'm doing. I've got skin in the game. I'm not telling you, what you should do, of course. I don't give financial advice, but I tend to just share what I personally have been doing. And on the dips, I buy silver. Now, this individual kind of indicated that I'm just lining my pockets by selling gold and silver specifically, and that I'm not, stacking it myself. Well, that's actually not the case. I mean, these are two tubes of silver Australian kangaroos that I just picked up from SD Bullion. And I know sometimes people say, well, you got a sponsor, your incentives aren't aligned to be objective. Well, reason SD Bullion is my sponsor is because it's where I buy my gold and silver. I know that they have, legitimate products. I've actually been to their facility. I've seen it. It's a very tight operation. I can tell you that. They have very competitive pricing. I know what I'm going to get when I order from them. So that's why they're my sponsor, It's not a commission kind of operation. I don't get paid when people go to SD Bullion and buy from them. So, don't think that I'm just here shilling for gold and silver because I have a sponsor. I mean, they pay me to say their name on the channel, and I'm happy to do that because they are a bullion dealer that I trust in an industry where, not everybody is completely above board. So now that I've addressed those topics, let's talk about what we're really stacking for. And to me, stacking gold and silver, it's not something to trade in and out of. I know I talked about, people selling their silver and then maybe getting into gold, buying gold. I think the specific individual I'm referencing said they were going to sell their silver now, wait for a pullback, and then buy into gold. And again, the GSR, gold to silver ratio, kind of indicates to me that it's a good time to maybe do the reverse. But, you can do whatever you want. As I've said before, look, I don't care what other people do. You can stack gold, silver, Pop-Tarts, Beanie Babies, whatever you want. I'm just telling you what I'm doing, and I am continuing to stack precious metals. I like gold too. I haven't sold my gold because sometimes, you might need to slip $2,000 worth of metal into your pocket, and to do that with silver, it's going to be a little heavy. But silver is so cheap right now that it's hard to buy anything but that, and that's just kind of my take on it. And the end game, of course, for the precious metals, what we're stacking for, it's not for a 10% up move and then we kind of sell out, trading in and out of the metal. If you want to do that, go buy the SLV, go buy PSLV. There's lots of derivative paper instruments that are suitable for moving in and out. And again, I'm not telling you to do that. I'm just saying that from my perspective, if I'm looking for a vehicle to trade the price of gold and silver, and I have done this in the past, I'm going to be looking towards things like SLV or PSLV. With SLV, you get options. You can kind of get some leverage. You can do a lot of things that you can't do with physical metal. You're not paying the premiums. The bid-ask spread with paper assets is much lower. But for silver and gold, too, the reason I've never sold any is because what I'm stacking for is the long term. And it's insurance, essentially, against a collapse of the current financial system. Now, when is that going to happen? I mean, nobody knows for sure, right? Nobody knows when the bottom is going to fall out of the current financial system. Will it be tomorrow? I mean, probably not. Could it be tomorrow? Yeah, 100%. I mean, just look at this. This is the chart of New York Community Bank Corp. Today, actually, at the time I started this video, this was down, I think, about 14%. Now, it's already down 17%. Okay, this is a regional bank. They took on the assets of Signature Bank last March when the banking crisis kicked off. The banking crisis that we've been led to believe has been solved. We've got this strong, resilient economy now. The banking system, Janet Yellen tells us, is robust, well capitalized. Well, look at this. I mean, does this look well capitalized to you? Does this look robust? No. This looks like a regional banking crisis where they kicked the can down the road, and now you can see New York Community Bank Corp. The price has fallen well below the lows of last March, and I suspect this could just be the first domino to fall in a cascading financial crisis. Now, is that going to be the case? Again, I don't know. I don't have a crystal ball. But, we know that we have a debt-addicted financial system that is a house of cards. Anything could trigger a financial crisis here. They haven't solved any of the crises we faced in the past. The great financial crisis. Those problems are still present. They just papered over them by the quantitative easing and the Fed buying up all this debt and stimulating the economy, basically getting the economy hooked even worse on cheap money. That's why, I put that video out yesterday about the risks that we see in gold and silver right now, because there is a possibility that the spot price could fall. I mean, will it? I don't know. These people who are selling their gold or silver right now and hoping to buy in during a crash, I mean, I think you're kind of, playing a risky game there. I wouldn't want to be sitting in fiat waiting for a crash. Now, do I have some powder dry? Sure. If a crash occurs, will I buy more? Yes. Is a crash in the price of gold and silver guaranteed? Absolutely not. I mean, look at what happened last March when the bank started to fail. Was there a crisis in gold and silver? The price crashing? No. I mean, what we saw actually was a huge influx into the metals, and the physical stuff especially, it was very hard to get your hands on. Premium soared, shipping times exploded, and, this time around, it looks like we could be shaping up for round two of that. So I would be very, very hesitant to liquidate my precious metals in today's environment, and hope for some kind of a pullback. I mean, I think that's a fool's errand. But again, I'm not telling anybody what to do. That's just my take on things. Another thing I've heard people say, just to address another criticism, is that now, because I've seen this one pop up a lot in comments and other people saying this, that silver is now just an industrial metal, right? It's not a monetary metal. That's a reason not to stack it. That's why we're seeing the current price action. No, that's not the reason that we're seeing the current price action, at least if you ask me. And I'll tell you why. So silver has been a non-monetary metal since 1873. I know it was in our change, in our currency until 1964, but just look up the crime of 1873. It was essentially when we were put on a non-bimetallic monetary standard. So silver actually hasn't been a monetary metal for a very long time, and yet, look at what happened in 2011. Silver went to $50. Look at the 1980 price action. Silver went to $50. Today, silver is at what? 22.60. So, there have been these significant bull markets in gold and in silver since the time that silver was demonetized. So, yeah, silver's an industrial metal, sure. That's actually a positive thing for it. I mean, it's a lot more useful in industry than gold, if you think about that. Silver, we've had these massive supply deficits for the past several years. Every year, you're losing hundreds of millions of ounces of above ground silver. And it's because industry is consuming it faster than it can be mined. And why isn't it getting mined more? Well, because the price is so low. So you can see this is kind of like a self-correcting cycle here for silver. And I also just want to point out, the gold to silver ratio is at 90.47 right now. The mining ratio of gold to silver, let me know what it is if you know off the top of your head in the chat. I know it's like 1 to 7 or something like that. I think the ratio in the Earth's crust is like 9 to 1. Anyway, I mean, the 90 to 1 ratio is just near historic highs. I mean, the lows, if you go back to 1980 even, it was like, what did the GSR get down to, 15 or something like that? I mean, in 2011, as recently as that, when silver went to 50, it was at like 35. So, silver has performed very well in recent history in certain windows of time, even though it's not a monetary metal. And I suspect that should we see the world switch over to some kind of a commodity-based system, silver will probably play a pretty significant role in that. You hear often that central banks are only stacking gold, and they are certainly stacking a lot of it. I don't think any of them officially have large stockpiles of silver, but that like the Russians, the Chinese, probably in India too, there are probably some fairly significant state stockpiles that they're hoarding because they know that this stuff is in fact money. I mean, it's been money for thousands of years. It's actually kind of an interesting story, if you don't mind a bit of a divergent historical rant here, how silver kind of got demonetized. It was sort of a fluke of history. Isaac Newton, I believe, was running the British central bank, and this is at the time the British Empire was growing in the 18th century, and he kind of pinned or pegged the ratio of gold to silver inaccurately. He didn't do a good job of it. And it created this arbitrage opportunity where all of the silver fled England. People would go to England, they take their gold there, they buy silver with it, go to the continent, and just repeat this cycle. And Britain got drained of all of its silver, a large portion of it, so they went on sort of a de facto gold standard. And then the British, being the largest, most powerful empire in the world at the time, eventually, over the next couple hundred years, the United States and continental Europe sort of followed along, and that's how silver got demonetized. I mean, never mind that it's been money since thousands of years into history. You're talking about like ancient sites in Sumeria and in northern Egypt where they're digging up piles of silver shekels that were being traded. I mean, this stuff has been money forever. Just because some guys in a hallway somewhere dressed up in some fancy outfits want to sign a piece of paper that say it's not money. I mean, it doesn't mean it's not money to me, but listen, I mean, whether or not we'll see remonetization of silver, I mean, that's not a completely outside of the realm of possibilities event, by the way. I still think it's going to do very well. And, here's the thing about silver. The gold to silver ratio, what happens when people are not that interested in the precious metals, when sentiment is low? They tend to move into gold because when sentiment is low, if you're in gold or silver, you're looking for a safe store of value. And investors view gold, probably correctly, as the more stable, more secure store of value. But the thing that happens in these gold and silver bull markets, which we might be in the nascent phases of one right now. There's not a hot bull market cooking in the precious metals. I mean, you can just tell that by the sentiment. Who out there is talking about gold and silver? Very few people. I mean, tons of people talking about tech stocks, AI stocks, cryptocurrency, but to me, I don't want to buy into any of these existing bubbles. I want to get in on the ground floor of the next bubble, which, when sentiment rotates over to hard assets, which is coming, by the way. And again, we'll talk about the Endgame here in just a moment. I mean, we kind of already started with New York Community Bank, but when that happens, people tend to get greedy, once people actually start moving into the space. And then they view silver as the potentially better speculative asset. And it is, just like gold is a better store of value, silver is a better speculative asset because it's a smaller market. it is more volatile. You know, if you're trading, if you're speculating, you want things that are volatile, that are going to have big price movements, and silver is that. And hello to everybody in the chat, by the way. I see quite a few people chiming in the chat saying hello. Greetings. Do me a favor, smash that like button. We're at 71 likes right now. If we get it over 100, I would be thrilled. That would help spread this information, because I do think it's important for people to hear about gold and silver. There's not a lot of people talking about this, but when people start talking about gold and silver, you know, and it's going to happen because, again, the financial system is a house of cards. You got a little preview of this last March. Banking system started to fail. Fed moved in. People were buying up physical metals like there was no tomorrow. Fed moved in, FDIC moved in. They did tons of damage control. You know, they opened up that bank term funding program where they're loaning out more than $100 billion to these distressed banks with these devalued treasuries as collateral at face value. So they're giving these banks free money to bail them out. Got everybody assuaged. Hey, look, there's no crisis here. Look over there. There's nothing wrong here. And, you know, you saw the interest in the metals turn down. But what's going to happen when the banks start failing again? Because, you know, they didn't fix the problem. That's the important thing to remember. None of the problems have ever been fixed. So, you know, when this starts to cascade and this contagion starts to spread, then, you know, there's going to be a huge move into the precious metals. And you'll know that you're kind of towards the peak of that bubble. The number one thing I would look at for knowing when it is time to sell your gold and silver, and again, this is not financial advice, but this is the cue I will be looking for, is when you see the gold to silver ratio compress, because people will get greedy. They will move into the silver space. Silver is a tiny market. If, you know, a tiny fraction of the amount of money that is being invested right now in AI stocks or tech stocks, if even a minuscule fraction of that moves into the physical silver market, it's game over for gold and silver. And, you know, when you see the ratio compress, when you see it go below 30, when you see it, I mean, maybe drop into the teens, who knows? That's going to be a time when you might want to consider selling some silver, you know, maybe selling some silver and swapping out into gold. I don't know that I'm going to be switching into fiat, but, you know, if we saw the gold to silver ratio drop to 20, I would sell probably most of my silver and buy gold, but I'm not doing that when the gold to silver ratio is 90. You know, that's doing it wrong, if you ask me. That's just my take on things. But look, I mean, the end game here is this: $34.2 trillion in debt. You know, how do they bail the system out? How do they bail collapsing economies out? Well, they run massive deficits. Right now, if you annualize the deficit from the first quarter of this fiscal year, we're running about a $2 trillion a year deficit. That is what is keeping the system afloat right now. There's a huge amount of normalcy bias out there. People think this is okay. I mean, let me know what you think. Do you think that running a $2 trillion debt deficit annually is sustainable? Put a 1 in the chat if you think we can just do this indefinitely. Put a 2 if you think there will be consequences for this, because there will be consequences. Ultimately, all of this debt, all $34.2 trillion of that, not just that, but all the unfunded liabilities. Let me see if I can find that on here. Yeah, the $212 trillion in unfunded liabilities that the federal government is on the hook for. All of this is going to have to be monetized by the Federal Reserve. I mean, look, there's two options here for the end game. One is that U.S. politicians drastically cut spending. They cut into entitlement programs. They end the military-industrial complex. They stop borrowing huge sums of money. They let the whole economy collapse. Or they continue spending and they have the Federal Reserve print the money. I mean, this is such a no-brainer, and it should be so obvious to anybody paying attention that this is where we're headed. But, you know, again, it's an advantage for stackers that other people out there are under this spell of normalcy bias and they don't see what's coming. I mean, I see a lot of 2s in the chat. I see a couple 1s. Okay, the modern monetary theorists in the chat. That's fine. Welcome. I like all viewers. But, you know, if you're a rational human being and you understand that this can't continue indefinitely, you know, if you believe in mathematics, then you got to understand that the end game for this is going to be a massive devaluation of the U.S. dollar and the loss of the reserve status of the U.S. dollar. Now, again, you know, is this going to happen tomorrow? Extremely unlikely. I mean, could it? Sure. I guess once things get going, they could happen pretty quickly. But, you know, ultimately, we are going to see a lot of chaos surrounding this. We are going to see moves like you wouldn't believe. Just look at today's headline. Suspected drones used by Yemen's Houthi rebels attack 2 more ships in Mideast waters. So, We've been bombing the hell out of Yemen. The UK and US and these coalition forces, they're still attacking international shipping. We're bombing Iranian targets throughout the Middle East. You know, the Iranians have sworn that they're going to strike back. When is this going to happen? I mean, I don't know. I don't know when things are going to pop off. The BRICS, the global south, they are attempting to de-dollarize. You know, they are undermining the dollar status as the world reserve currency. You got Saudi Arabia in BRICS now. You've got the petrodollar system under threats like never before. Look, wars have been fought over much less than this. So you can expect the warfare to continue. You can expect the debt to continue to explode. They're going to defend the petrodollar. They might be successful. I mean, I don't know how far they can kick the can down the road. To be honest with you, it's kind of surprising that it has gotten this far. I mean, I will say that much. I mean, when I started stacking in 2008, 2009, around the great financial crisis, I saw that the debt was ballooning. I saw what the Fed was doing with QE, and I thought there's no way this can go on for long. But here we are. It's 2024. We're $34.2 trillion in debt. Surprise, surprise. They can kick the can way down the road. You know, maybe we get to 2026. Maybe we get to 2027. Maybe we get to 2028 without the dollar losing its reserve status. I don't really know. I mean, I don't think anybody can forecast accurately when these things will fall apart. But the threats to the system, the current system, are bigger than they have ever been in its history since the dollar was taken off of the gold standard in 1971. Now, also, you know, I want to mention, I'm talking all about silver and how, you know, it's foolish to sell your silver for gold. I'm not critical of gold. I mean, gold is a good thing to hold, right? I mean, maybe I'm just a little bit more of a gambler, and that's why I like the silver, because I'll be honest, it is a little more speculative than gold. I mean, is it possible that you could see the price of gold absolutely exploding and silver get left behind? I mean, I suppose that's possible. I mean, it's never really happened in history. But could the gold to silver ratio go higher than 110? That's the highest level it ever hit in 2020. Yeah, sure. I mean, anything's possible. I mean, maybe tomorrow I'll walk outside and I'll see a giant spaghetti monster flying over the horizon, right? The laws of physics don't preclude it, but I have a hard time believing that that's going to be the scenario. You know, I think we can see things playing out here. Sentiment for the metals, it's in the dumps. That's why folks are not focusing on silver. That's why they're focusing on gold. It's very understandable, the psychology here. That's why I'm continuing to stack silver, because it's cheap right now, and I do believe that that will change. I mean, we are still within the normal range for the gold to silver ratio, and I can tell you that in the past, when the gold to silver ratio is where it is, if you bought silver, you tended to do pretty well. For example, in 2020, when the gold to silver ratio spiked up to 110, the spot price of silver dropped down to like 12, 13 bucks. That was a killer time to buy. I mean, if you bought then and you rode the wave up to 29 bucks, you did pretty well for yourself. In fact, when the price of silver plummeted in 2020, I actually did do some trading. I bought some call options on the SLV, and you know, they turned a nice little profit. Now, look, I've speculated in markets and lost before too, so you know, it's easy to just focus on those times when you did it right. But my point is that, you know, silver is, yeah, sure, it's not money. I mean, right now, gold isn't money either. I mean, central banks hold it, but nobody's out there spending gold. Will there come a time when they do? Yeah, I think it's very possible. I mean, if you look at even stories from Venezuela during their hyperinflation recently, people were using gold flake that they were finding at like mines and in riverbeds and stuff as currency. Now, they also used dollars quite a bit during that hyperinflation, but the question is, what do you use as an alternative fiat currency once the US dollar is the currency that is collapsing, right? I mean, there's no real alternative, except, of course, for the one that humanity has time and time again turned to serve as money in the absence of a stable fiat currency. That's gold and also silver. You know, silver actually was more often money than gold throughout the vast majority of human history. Sure, you might have some kings or some wealthy merchants settling trades in silver or something like that. I mean, I'm sorry, in gold. But for the average person, you know, for most people, even for, you know, most transactions, people were using physical silver coins. Even here in the United States, up until 1964, you know, the quarters, the dimes, the half dollars were made of silver. Very few people were walking around trading in gold coins in the United States. I can tell you that. I mean, some might have been, but plenty of people were trading in silver very recently, like in living memory. There's people alive today who went to the grocery store and bought things with silver coins. So To say silver's not money, to say, oh, it's just this industrial metal, fine. Again, this is just an example of the negative sentiment towards silver. The more people that sell the silver right now, the better, because I am buying the dips. I mean, I am taking my own advice. I've got, and again, sorry, not advice. I don't give financial advice. I have to say that here. I'm not telling anybody what to do. And, physical silver is not right for everybody. But in my case, I like to have assets outside of the digital financial system. I like to have assets that are still going to be valuable after the dollar collapses, which is basically inevitable. For something that people look at you so skeptically when you talk about it, like how could the dollar ever collapse? Listen, name me one fiat currency throughout history that hasn't collapsed. I mean, they always do. Ultimately, if you look at it's something like out of all the fiat currencies in the past 200 years, 80% of them are completely gone, and there's not a single one that hasn't been massively devalued. And don't tell me the dollar hasn't been massively devalued because, gold was 35 bucks in 1971, and today it's over $2,000. And even silver. I mean, silver has gone up considerably. Like, look at the year 2000. What was silver trading for? Like $4? So if you go back 24 years, silver was at $4. Today it's at 22. Is that great gains? No. Obviously, those gains have been massively outpaced by paper assets. But part of that is because all of the money that's been printed so far has flowed into these kind of more speculative paper assets. I think there's going to come a time when that money starts flowing into hard assets. Hey, Scott, I see Scott saying hello in the chat there. I do appreciate all of the regular viewers. And, criticisms aside, those don't bother me. I just want to say, if you take issue with anything I say here in these videos, feel free to make a video, call me out on it. Feel free to leave a comment telling me why you disagree. I mean, I think conversation is good. Now, I don't appreciate it when people say like smart silver stagger's just lining his pockets and he's leading us astray to sell silver. No, look, again, I don't care what you do. You don't have to go buy silver. You don't have to go buy gold. That's what I'm doing. I just picked these up from SD Bullion. If the price of silver drops, I'm going to buy more. Now, am I going to endlessly buy? Well, no, I'm not like a rich guy. I don't have millions of dollars of fiat. I'm not out here buying monster boxes. But look, I'm slowly accumulating silver. I think it is ultimately going to pay off. It's an insurance policy against a crisis, which I believe appears to be inevitable. I mean, tell me this. Look, if you think that the end game for silver is to just be, relegated to the ash heap of history, some worthless industrial metal. I mean, people say industrial metal like it's a bad thing with silver. I mean, silver is the most useful commodity out there aside from oil in terms of its sheer number of applications. It's the most conductive metal on the periodic table. It is the most reflective metal on the periodic table. In an era where we are heading towards clean energy, it is a critical ingredient in solar panels. The solar use alone is skyrocketing. Like the fact that silver is an industrial metal, that means it gets consumed. That means the supply is decreased. If you understand supply and demand, that's a good thing for those of us who hold silver. So saying it's an industrial metal, no problem. But listen, what's the end game for silver? When you see $34.2 trillion in debt, when you see, $212 trillion in unfunded liabilities, what do you think is going to happen? You think this is just going to continue the way it has forever? I mean, I think people get stuck in this trap where they look back to the past, 50 some odd years of pure fiat currency and they think, well, this has worked so great. Everything's just going to continue. No, it's not. This is an unsustainable system that is addicted to debt. Now, look, in the short term, are we going to get some decreases, some volatility? Yeah, probably. I mean, just look, we had Neil Kashkari come out here telling us that the Fed is going to have to keep interest rates higher for longer. Jerome Powell also was on 60 Minutes telling us, this hawkish message. Why do you think they're rolling out the PR campaign to try to convince everybody that they're going to keep up the inflation fight? I mean, you got to look deeper than the surface here. It's because they know they're going to have to print. I mean, we got banks failing today, folks. New York Community Bank Corp, it's failing. Its share prices dropped by a vast amount. It was at its highs in last July. It was over 12 bucks. Today it's at 460. This is a portent of what is to come. So the Fed is going to have to get in here eventually. They're going to have to monetize debt, or they're going to let the whole system collapse. I suspect we're going to see a lot of money printing before the election. This is my personal take on where things are headed. If you want to know, when that silver end game is coming, I'm not saying the whole dollar is going to collapse before then. That probably we have some more time on, but again, who knows, right? I mean, things are moving quickly here. The world stage is chaotic. We got NATO conducting massive drills in Eastern Europe. You got North Korea bulldozing the reunification arch. You got China conducting exercises around Taiwan. You got Yemen launching missiles at shipping containers and oil carriers. You got Iran and the U.S. on the brink of war. I mean, anything could happen here at any moment. And if you think that our financial system is strong and resilient and immune to any of these potential bumps in the road, well, look, you've probably been watching too much CNBC. I don't really know what to say about that. But I think we could see some big moves here sometime this year. I think it's going to be when the Fed is forced to print, because they're going to be forced to print. They probably won't print until their hand is forced. It's very rare for the Fed to try to get ahead of these things. They kind of already have by hinting that they're done hiking rates. So they've kind of telegraphed that move a little bit. But everybody's thinking now, oh, we've got to wait to May for rate cuts. It's not going to happen in March. Big deal. Big deal that it happens a couple months later. They're going to print a huge amount of money. And a lot can happen between now and March. With the problems in the regional banks, I would not be surprised if we see the Fed forced to intervene in these markets when they do, they're going to have some kind of excuse for it. Don't worry. The propaganda machine is going to run very strong. They're going to say this isn't bailouts. It's not stimulus. They're going to come up with language to try to mollify the public, but there's going to come a point where it becomes obvious what the end game is. And that's when people are going to start rushing into physical gold and silver. Again, when is that going to happen? I have no idea. I think there's a strong likelihood it very well could happen before the election this year. But we'll see, and until that time, I'm going to keep stacking. And if I have to wait a year or 2 years or 3 years, and look, I don't even view it as waiting. If this crisis doesn't happen, I'll actually be better off. I hope I'm wrong. I hope I'm incorrect, because if there's a massive economic collapse in the United States, you're not going to be rich from stacking gold and silver. Maybe you'll be insulated from the worst of the effects, the economic effects at least. But it's not going to be a picnic. If I'm right about the price of gold and silver here, it's going to be ugly. So, there's other things you need to be doing to get prepared as well. Security, work on your physical fitness, get some food, basic stuff, get some water. You're going to need all of these things. But, maybe I'm wrong. I hope I am. I think we'll probably all be better off if everything does continue the way it has been, because it's all been pretty good compared to what's coming. That being said, you can kind of hope in one hand and crap in the other, and you'll see which one fills up first, right? So I think that we're facing down a big crisis here, and gold and silver are going to be a big help. So let me know what you think in the comments down below. Really do appreciate every single one of you who watches. Do me a favor, subscribe to the channel if you haven't yet, smash that like button, and stay tuned, because we're going to be talking about this crisis as it plays out. And I'll do my best to keep all of you up to date. And I do appreciate all of you out there who keep me honest as well. So thanks for watching, everybody. Stay safe and happy stacking. I will catch you next time. Smart Silver Stacker, out.